sitting in landlocked Geneva to get an update on the biggest story in the world, it would seem. Rustin Edwards, head of fuel oil procurement at Euronav. Rustin, what's going on? Should we be concerned?
Well, the Ever Giver, running hard aground, has really put a short-term disruption to supply chains from what it looks like. It's not the first time ships have run aground in the Suez Canal and have caused disruptions. Last time it happened was 2018 with a much smaller ship. So this is the first time a ship of this size has actually ran hard aground. Currently, from what I've been able to ascertain from the local agents and from other sources, the ship's is no longer T-boning the canal. It's now alongside the embankment, and they're looking or they're putting together a strategy to move it to a safer anchorage so they can actually do a full investigation on the ship, make sure it's still operational, and so it can continue on its trade route. So as of right now, probably another 36 to 48 hours of delays getting through the canal, and then things will start to ease up. But expect that it's going to cause ripple effects throughout the whole supply chain for box boats as well as for wet bulk.
But you would expect this to be resolved as a major issue today?
I don't know if it's going to be today or if it's going to be tomorrow or by the weekend. I mean, it is a large ship. I mean, some of the, it is equivalent to the same size as probably a Suezmax tanker. So it is going to take some time and effort to get it moved from its current location between Port Suez and the Great Bitter Lake, which are 2 points on the transit route of the Suez Canal, and get it shifted to a place where it can actually be checked for operational readiness and investigated as to what actually happened that caused the incident. So,
but in terms of blocking the two-way system on the canal, that should be resolved in the next 24, 48 hours.
I think my own estimate, not being there on the ground, is just looking at from what I've read, it's probably going to take another 2 days to clear up the ship and get it into a position that it's more available. And if you see from what's happened in the markets today, they're already selling off on the news that the ship is not T-boning the canal anymore. It's now alongside. I think it's just a matter of them getting the right tugboats into the canal to secure the vessel and then shift it up with proper towage.
Okay, Rustin, listen, thank you so much for jumping on the call late and giving us that update. Very useful, I think, for the markets to have a immediate insight. Thanks, Rustin. Have a good day.
My pleasure. Have a good day.
Let's kick off the daily webinar with our regular Thursday commentator, Dr. Carole Nakhle, CEO of Crystol Energy. Carole, good morning. Despite all the drama, oil prices seem to want to go down. The trend of the last week and a half now seems pretty well baked in. It's softer, it's sort of glass half empty rather than glass half full. How do you see the macro situation at the moment and its impact on the markets?
Good morning, Sean. I mean, you know me, I don't like to chase daily movements in prices, and because you really cannot learn much from chasing.
That's why I gave you the 10-day introduction.
Exactly.
I gave you a whole 10 days to play with.
Yeah, I would go a little bit longer next time. No, really, but what we see is just since February, I would say, if you look at the behavior of prices, almost on a weekly basis, we have 1 week it goes up, another week it goes down. It's like, like an engine trying to take off, but then it goes down. But when you look at the bigger picture, of course, they have recovered significantly from the levels where they were at last year. So we have to be careful when you use terms like declining or increasing. There seems to be a kind of a floor around the $60 a barrel for Brent, especially with the OPEC Plus agreement still in place. And let's see what they are going to decide about next week. But the kind of recent developments confirm the concerns of OPEC Plus at their last meeting when they were cautious about the market recovery. And today we talk about recovery in certain countries. We said before on your show, lots of speakers have highlighted that it remains uneven. I mean, look at me where I am in Germany. I was preparing a very long list of shopping yesterday, only for Angela Merkel to say, oh, sorry, that was a mistake. We're not going to introduce a strict lockdown in the country. Well, who knows? Maybe tomorrow she comes over and she changes her mind again, say, oops, another U-turn. So lots of uncertainty, especially, and don't forget the EU is a major, it's a major economic bloc. It's the largest economic bloc in the world, and things don't look as good as elsewhere, such as in the US, in the UK. So on balance, there is no firm recovery evenly distributed around the world. Some countries are doing well, other countries are not doing so well. And that's why whenever you have good news coming from the good countries, you see the pressures going up and you see on prices. And you see the bad news coming out of the incompetent countries, then you see pressure going down. But overall, I think that there is some kind of floor established around $60 a barrel for Brent.
Thank you for that opening thoughts. Laury Haytayan, MENA Director, Natural Resource Governance Institute. Laury, the other big factor impacting the somewhat downward draft on prices is the unknown quantity of Iranian oil exports now creeping in to the market in a relatively significant way, and perhaps getting caught up in a China-US geopolitical issue. But nonetheless, they're moving more and more. How big of a challenge do you think that is for OPEC Plus? The fact that these outliers, the Irans, even shale oil maybe, are making it more difficult to read the supply-demand balance.
So definitely we're hearing a lot about these that are coming on the market and pushing the prices downward, but and taking into account that the Iranians are saying we will increase these shipments, and so the numbers will increase. So I think this is something that the OPEC Plus will.
And they've nothing to worry about the Suez Canal because it's unlikely those barrels are going to Europe.
Yeah, but like they need to take these seriously. And if the Iranians told us at the last year that they will increase it, and most of us were like, no, this will not happen. It is related to the to the US Iranian negotiations, etc. But the Iranians are moving forward with this. So I think now it's time to take that serious. If they're saying we'll increase it, so they have means, they are kind of increasing that, and it should be taken into account going forward. These are like more than 1 million barrels coming into the market that should have been like the OPEC Plus barrels, right? So, and we were supposed now by April to have like almost 2 million barrels from OPEC Plus. We're seeing other countries like Libya and Iran bringing these, and the OPEC Plus production staying where it is. So I think going forward, they need to take that serious. And think about it when they're deciding what to do with what decision to take, because this is not linked anymore to the negotiations. Negotiations have taken different path, and the production and the Iranian export is taking a different path.
Let's also welcome Richard Redoglia. Excuse me. The silent
G, exactly.
CEO of Matrix Global Holdings. Richard, welcome to the table. I mean, one of the other big stories that are coming up next week, which has sort of been happening quietly in the background, is the fact that Abu Dhabi ICE is about to open the ICE Abu Dhabi exchange with the launch of the Murban futures oil contract for the first time. What are your thoughts on the outlook for that, and what is its chances of becoming indeed the global benchmark that they aspire it to be?
Well, I don't want to give too much of my opinion, and it'll really come from my background. I happened to run Merrill's institutional brokerage desk through the entire 80s and 90s, and was around for the inception of all the contracts, WTI, Brent, natural gas. So I got to see firsthand the acceptance of futures contracts. And one of really a couple of things I think we have to take into account. When in 1983, when WTI started, it competed with LLS. And there's a whole story behind that, which is not really for this conversation, but it's a very interesting story of how WTI basically beat out LLS as the benchmark. But the real success of WTI came for three reasons. One was it had a parallel contract in New York Harbor, heating oil. And so when a futures contract comes to the marketplace and you have a parallel contract that has liquidity, it allows volume to trade out the curve. In this case, we saw crack spread trading, right? So you had people buying and selling crude as a function of heating oil as a crack spread. So that created liquidity. The second was forward hedging. Oil producers, ARCO, Sohio, if you remember that name, they took on the idea that it's better to sell crude forward on the exchange and deliver it into Cushing than it was to do contract and posted prices. So it created this kind of forward liquidity, months in 3, 4, 6, 12 months out. And then there was a significant group called locals, which were the floor traders who actually made markets in penny wide or 2 penny wide all the way out the curve. And those three pieces came together and allowed WTI to have this massive growth over time. And to me, and this has really been one of the problems with the Gulf Coast crudes, who hedges forward? Do producers hedge forward? Are they actively traders in it? They might be, but they're not creating that kind of liquidity, which really lends itself to a forward benchmark. And so we can have a benchmark. You could have Dubai and you could have these other contracts. But I wonder, are we going to see forward hedging by producers and this liquidity that's going to be needed?
Yeah, that is a very good question. And I think they haven't really shown their hands yet on that, except you would say from Abu Dhabi's perspective, a really grit determination to make this a success. Whether indeed that they're willing to do all of the granular technical pieces
Right.
that you're talking about there is perhaps we'll have to see. Of course, ICE would be very aware of all of these pieces that are needed, and we'll have to see indeed if they get it up and running. And they have their Asian customers as well that are there in order to place a very big role in and forward hedging would be a big factor for them as well.
There's an important point though, Sean, and the important point is in the current environment of OPEC Plus and Zoom OPEC meetings and this ability to have supply demand realized in real time, you've created backwardation. Producers do not like to hedge in backwardation.
No.
So it's a double-edged sword.
And that's kind of their aspiration, always backwardation. Carole, back to the sort of immediate dynamics of where the global recovery is going. We saw overnight some really positive numbers in terms of US manufacturing, PMI edging even higher, up to 59, which is a big number of confidence in the outlook. And also European PMI numbers beat expectations. The sort of forward outlook remains very strong.
Indeed. I mean, don't forget that there was lots of money, massive fiscal stimulus packages put in the economy to support the economy. And we're seeing the fruits of that support coming now. I mean, it would be really silly not to see anything coming out of those massive figures. I mean, record high government spending and support for the economy. So you would expect that. And of course, we are getting better at dealing with COVID-19, but it's still there. We cannot ignore it. And maybe it's looking better in some parts of the world. But okay, if I forget about the developed economies, if I develop about Europe where things don't look that bright despite the numbers, and what about the developing economies? Things are looking pretty dreadful there. The numbers of infections are spreading quite rapidly. Things like in Asia and India don't look that encouraging. So the global economic outlook remains highly uncertain. We are heading in the right direction, Sean, but you still have, you know, it's very difficult to talk about a boom, global boom in economic recovery. You actually have the engines, Asia, China, and the US driving that perhaps growth, but you have also heavy baggage.
Even with these, the sort of, obviously you're in Germany and you're very well aware of the continued lockdown challenge there, but it would appear that even in the economies that are in a lockdown, COVID lockdown scenario, they're still increasingly being able to perform alongside COVID. The idea that the economies are able to deliver productivity even with this uncertain outlook, and perhaps there we're exceeding expectations.
Yeah, but lockdown is not what we have now in Germany is not the same as we had in April 2020, for instance, very different. So I think since April 20, we haven't had a lockdown as severe as what we had last year. And this is why when Angela Merkel wanted to do this kind of strict lockdown around the Easter period, she immediately changed her mind because she realized she was going to face all sorts of legal challenges and logistical challenges. Plus, you know, people are opposing to that. So that's why it depends on what kind of of definition for lockdown you are using, but life is going on. It's not as bad as what we saw last year. So I'm not surprised to see productivity getting better. And don't forget here, they are getting much better at dealing with COVID. The death rates are falling. The duration of people that they are spending even in hospital is getting shorter and shorter. So there is a positive indicator, not just on the economic front, but also on dealing with COVID. But when you think about the global economy, you cannot ignore the heavy burden that the poorer countries are going to face, and they are still facing. And at some point that will weigh down on the global economic outlook going forward, unless we deal, for example, with the massive debt accumulated in those poor countries who are also struggling with rolling out vaccination and with the spread of the infection. So again, I go back to the point I was making earlier. It remains a very patchy outlook.
Laury, the other issue that's playing out in the markets is that where's the geopolitics going? Of course, we've had the sort of China-US drumbeat, but we also have the Russian engagement. And I wanted your insights. Obviously, Russia seemed to be able to navigate something that the US is unable. They seem to be able to be very friendly with the Arabs and the Iranians at the same time, and even the Turks. And America seems to be having issues with all of them independently. I'm wondering, how do you see the Russian-Turkish relationship at the moment and its impact in the Gulf and the issues with Iran?
So basically, Russia is filling a void that the Americans have left in the region, and definitely Russia's interest is in Syria. So now all these rapprochement or all of this coordination that we're seeing between Russia and Turkey, it is kind of related to the stability that Russia is seeking in Syria. So for them, it's time to start like the post-war reconstruction, etc. And they need everybody to be on board, from the Arab world and from Turkey, to be on board with what the Russians are going to impose in Syria. And this is why we're seeing a lot of action, either people going to Moscow to discuss these issues, or like when we saw the Minister of Foreign Affairs going and making all the visits in the Gulf. So part of it is the stability in the region. Part of it, it's like Syria and what to do with Syria, because Iran is involved as well in Syria. So they're using that and the American or the limited presence of the Americans, so that they would talk to everybody to establish themselves, because it is very important for the Russians. They established themselves with the OPEC. So OPEC Plus is something that is existing since 2016, and it's strong because they were able together to maintain like what we have today on prices. And now they are like, and the other Russian interest is their presence in the East Mediterranean. This is a big deal. Again, like at the end, I'll give you some update on what's happening in the East Mediterranean. But like, it is a big deal for the Russians to have their navy safe in the shores of Turkey, on the shores of Syria and Tartus. And it's very important for them to be that much advanced vis-a-vis like NATO countries like Turkey, Greece, etc.
And on the ground in Libya,
Yes, true. But now all the attraction is on how to bring stability to Syria, and for that they need Iran, they need Turkey, they need the Arab Gulf countries. So this is what they are navigating after, like as I said, like really being in a comfortable position with OPEC.
10 years on, it certainly seems like time to resolve Syria. That's for sure, the tragedy that is. Richard, in the US, there is obviously, we're seeing a very strong economic recovery. Generally, all the numbers are quite positive, despite the sort of traumas of a really terrible COVID experience. But yet the outlook, 6.5% growth forecast for 2021. We've just had a big stimulus. There's now talk of another massive stimulus to come again. How do you think the US economy shapes up to be this year? Will it reach these targets, do you think? Could it suffer a similar setback as Europe?
Goldman just raised it from 6.8 to 8%. So they've taken up to a remarkable number. 8% in the U.S. economy is a tremendous. But you make a very good point that, spring breakers are having a great time. So as far as being able to go out and be on the beach, that's been a booming business. But refinery runs are down significantly. We're 2.5 million under the 5-year average.
And we saw inventories build again this week.
Inventories built again. People just don't travel as much as they used to. I think having kids, one in New York and one here in California, the roads in California are not as busy. And I think it's everywhere. And so I think it's going to be a long haul as far. I think Carole's made a very good point, but I think it's a blotchy return. The people are not being out, and they're flying more, but and flights are packed. But one of the reasons is they've canceled so many flights. They've reduced the amount of flights significantly, and so that has to come back. So I think.
And do you think there is appetite or support, both socially and politically, in the U.S. for continued stimulus packages of this size?
We are a country that is completely split in half. We have senators that, with one senator or two senators, can make the decision. We have a thing called the filibuster, which is a very, very important legislative process. I don't think this $3 trillion makes any sense, and I think it's going to be very difficult to push that through. But saying that, there's already $2.5 trillion just sitting there without anything going, that hasn't even been spent. So we say these numbers that are so large that we've even lost focus on what they mean. But I think when you look at the U.S. in kind of total from a global perspective, it's going to grow. We're still going to consume. People they're going to get in their car and they're going to drive and they're going to buy things. I want to go back to one thing that Laury said about Russia that maybe you might not have seen on our side, from your side. But last in one of the only interviews that Biden had, he called Putin a killer.
Yeah, I saw that.
It caused the Russian ambassador to be recalled. And one of the things I've always looked at OPEC Plus was, will Russia ever back away? Are they going to kind of step back from this this kind of aggressive approach? And my thought was they might. But Putin was upset. And I think anything he can do to stick it to the U.S., he's going to try to. And so that I thought was an interesting thing that might. But if you saw it, I thought it was an interesting.
No, it's certainly. I mean, between the meeting in Alaska with the Chinese on Friday and Putin, the killer, I don't know, that was Monday or Tuesday. It certainly was a stormy week in geopolitics, and all of the ramifications of that still to play out. Let me put up my now somewhat redundant survey question. It would seem, after pulling Rustin out of his bed, he blew up my survey question. How long do you expect this Suez Canal blockage to last? Days or weeks? We think we know the answer to that. But nonetheless, Carole, this was a very big story. I think it still has legs, and it shows in some regards, I think, the fragility of global trade.
Yeah, but we shouldn't be too surprised about something like that happening in a very busy canal, such as the Suez Canal. So these things happen, and even if they create some disruptions, this is not really the end of the world. It's a logistical factor that will be resolved sooner or later. But does it really matter in terms of affecting global trade? Not really. And mind, it was an accident, not really, for example, a terrorist attack, which would have perhaps would have created.
Well, it's so nice in a way. It's just this old-fashioned kind of, the car broke down sort of. It's not this weird virus. It's not, it's just, the ship went this way and it stopped everything.
Right.
And also because of COVID-19 restrictions, one of the reasons we saw, for example, the increase in prices in Asia earlier this year, one of the factors was the bottlenecks around the shipping because of added security measures due to COVID. So we're seeing that already creeping in. So therefore, an accident such as that would affect. But it's interesting, Sean, that it feels today that maybe if a minister in an oil-producing country sneezes, you see the market reacting, but not because of tightness, weakness in the market is just because we are in a very volatile period where moods are swinging between two perhaps bigger extremes and within a wider range of expectations. So therefore, we see the market sensitive to these changes, but it doesn't mean that they will change the overall direction of the market. Just, expectations are playing a bigger role today. So that's why we see this bigger sensitivity to news today, but it doesn't mean that they will change the fundamental direction of the market.
This is the moment when I get to pull out one of my favorite stories that I was water skiing down the Suez Canal on the last time it was closed back in the early 70s when I lived on the banks of in Ismailia. And because the Suez was closed between 67 and 75, we had the pleasure as our weekend activity to go water skiing on the Suez Canal. So there ain't too many people that done that, I'd say.
Yep.
Laury, the question we're all facing in a matter of days when we come back next week will be, what's OPEC going to do? Is there, in this tradition of great surprises, is it at all possible that they could actually increase supply on this occasion, or will they do exactly what everybody expects and roll over?
Look, like now the thing is like whatever you think OPEC will do, they do the opposite. So I think like everybody's saying, and I've been hearing people like since last month till now that no, there will be a rollover. So I think there will be a rollover because of what we're seeing, but you never know, like the surprises of the Minister of Oil of Saudi Arabia, what he thinks about that. Maybe he wants to surprise us and bring back some barrels back to the market. So we'll see. But I think like from everything that we're seeing and the uncertainties, and definitely every day hearing like one or other city closing down, so most probably there will be a rollover or a small increase. I don't know. I'm saying that just like
Ana Misharif,
Ana makhasne, as we say.
Let's get the survey answer and then give Richard the last word this morning. If there's any doubt, if there's any outliers, 12% are in the weeks category. I had to plant a few there just in case. Richard, is there any sort of outside argument to be made that OPEC, in looking at the return potential of shale producers in the US,
Excellent.
that they may need to actually increase supply in order to discourage what looks like a building momentum of US production?
John, I think that is the excellent question, right? Is that what they've done is not only has OPEC taken supply demand and brought it together in real time, something we've never seen in this is my 5th decade I'm starting in this business. We've never seen this happen, where demand has fallen and we're in backwardation. And at no point in history has this happened. But your point you just raised is a very, very good one, is they've also crushed forward volatility. So there's no movement in the forward market. It just kind of just sits there and goes up and down in the front end. But what is the best way to kind of put the fear of low prices into the market? How about taking it down $20 for a month and a half, making the lenders all of a sudden, who've now become a little less shy. You've seen some of the numbers now, the lending is now increasing. What a way to make them say, hey, wait a second, this isn't just a straight deal anymore. I need to be careful. So I think, if you kind of take game theory, make the other guy act a certain way, I think an interesting play would be to raise production 1.5 million, take the market down to $43 for a period of time, and then take it back up again. Add volatility to the market, but more important, add uncertainty in the bankers' heads.
And I also think somewhere in the intersection point, there is geopolitics that are sort of, the tea leaves on are somewhat complicated, but there's clearly a few things to look at there where an outlier move might be on the cards rather than what the expectation is. But we'll have to leave it there for this week, this first year anniversary week of the Daily Energy Markets webinar. And thank you to everybody, obviously, who've contributed. And thank you today to Rustin, who jumped on, Laury, Carole, and Richard. Thank you all for your insights today. Have a great weekend, everybody, the end of your week. And we'll catch you all from Sunday. Take care. All the best.
Thank you.